When it comes to the future of tax withholding and reporting, the latest news from the IRS could leave many taxpayers feeling a mix of frustration and confusion. Because despite new tax laws, there's no immediate change in sight. And this is the part most people miss. The IRS has announced it will keep withholding tables and key forms like the W-2 unchanged through 2025. Even though a significant reform bill has just been signed into law. This means taxpayers who expected updates to help their withholding reflect those changes are likely to be disappointed this year. If you were hoping for a clear, step-by-step update from the IRS on how your paycheck might be affected by the One Big Beautiful Bill Act, OBBBA, you'll need to wait a bit longer. The agency has confirmed that there will be no modifications to the withholding tables or to several important information return forms, including Form W-2, Forms 1099 and payroll forms like Form 941 for the entire 2025 tax year. Employers and payroll processors are instructed to continue using current procedures for reporting income and withholding taxes. The reason given for this pause is that the IRS aims to avoid chaos during the busy tax filing season and wants to give itself and the tax community sufficient time to implement the upcoming changes effectively. But here's where it gets controversial. How the law will be implemented without new withholding tables or updated forms remains largely unclear. The IRS has promised more guidance in the coming months, particularly on how taxpayers can claim benefits related to OBBBA when they file their taxes. Additional instructions for both reporting entities and individuals are still in the pipeline, which leaves a lot of questions unanswered. Now, let's explore some of the specific changes you might see, or not see, in the near future, and why this could be challenging. No tax deduction on tips, temporarily. One of the new provisions of OBBBA is a temporary tip income deduction available from 2025 to 2028. Whether you itemize deductions or take the standard deduction, if you report qualified tips received in certain occupations, you could be eligible for a deduction of up to $25,000 annually, depending on your income. These tips need to be reported via forms like W-2 or 1099, and the law specifies which occupations qualify and when the department will publish that list by October 2nd, 2025. Interestingly, since the law is so new, transitional rules will allow taxpayers and employers to claim this deduction in 2025, even before the IRS issues final guidance. But detailed instructions on withholding adjustments or reporting are still limited. The key point is that no new withholding tables will be released for 2025, meaning your paycheck might not reflect this potential benefit just yet. Overtime pay and its new tax treatment. Overtime pay has traditionally been taxed the same as regular wages, but with OBBBA, that changes, at least temporarily. From 2025 through 2028, workers earning overtime can potentially claim a deduction on the portion of their overtime pay exceeding their regular rate, up to a maximum of $12,500 for singles, double that for married couples. This is a deduction rather than an exclusion, which means it reduces taxable income rather than exempting income from tax. The law states that only the excess overtime pay over your standard rate counts, which essentially captures the extra time and a half amount. However, since the current W-2 reporting processes haven't changed, we're left wondering how exactly this overtime income will be reported to qualify for the deduction, adding another layer of confusion. Special deduction for seniors. Another noteworthy aspect is a new temporary $6,000 deduction for seniors aged 65 and older, starting in 2025 and ending in 2028. This deduction can be claimed whether you itemize your deductions or claim the standard deduction. It's an additional benefit on top of existing senior deduction allowances. For married couples, this means potentially up to $12,000 in extra deductions, assuming both qualify. To qualify, seniors must have, on or before the last day of the year, turned 65. The deduction phases out for those with a modified adjusted gross income over $75,000 or $150,000 for married filing jointly. Like the other benefits, this is a temporary perk, and no immediate changes are expected to withholding or reporting procedures to accommodate it. Why did the IRS make an unexpected announcement? Many tax professionals anticipated that the IRS would update the W-2 forms and recalibrate withholding tables to help taxpayers benefit from these new provisions in 2025. After all, drafting and revising forms is a routine part of implementing new tax laws. Think of the last-minute changes Congress often makes, which keep the IRS scrambling. But this time, surprisingly, the agency has chosen to hold off, potentially creating a mismatch between taxpayer expectations and actual implementation. Considering that draft forms for 2025 are already available online, the delay is especially unexpected. It raises questions about how taxpayers, payroll providers, and employers are supposed to adapt if the forms and withholding strategies aren't updated. Should you adjust your withholding anyway? With so much uncertainty, many are wondering whether to tweak their tax withholding now to take full advantage of the upcoming deductions. For most, sticking with their current W-4 and withholding levels is the safest choice to avoid surprises when they file. If you've been quietly hoping to benefit from the extended tips and overtime deductions, though these aren't yet reflected in your paycheck, consulting a tax professional can help determine if preemptively adjusting your withholding makes sense. Just remember, any changes won't be immediate. Once you submit a new W-4, your employer typically takes about a month to implement it. Looking ahead, the IRS plans to issue further guidance and new forms for the 2026 tax year. If you don't make adjustments now, but expect to qualify for one of the new benefits, you could always revisit your withholdings next year. And remember, as Taylor Swift might say, you're on your own, kid, until more details emerge. To stay ahead of the curve, it's smart to subscribe to trusted updates, like Forbes' newsletter, so that the latest information lands in your inbox without extra effort. Because in the world of taxes, staying informed is half the battle. And with these changes still in flux, your best move might just be patience and vigilance.